Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming in YouTube. We got some really fast markets here on digital currencies. Bitcoin sharply higher this morning, just to jump right into it. We've taken some profits off the table here, recommending our traders to take some profits off the table on any digital currencies, GBTC, Bitcoin, GDLC. Some of these profits that have been built here are rather quick, and so we want to grab them as much as we can. Take partial profits up here. As the market is exploding, you don't need to get out of all of your position. Just take some partial profits and keep some of it, because the market is in an exponential move, and we could see much higher prices here as we take a look at the market here, particularly 4%. Bitcoin up about 76%. What I want to point out to you here is that the market in Bitcoin is almost reaching the upper end of this uptrend channel that is about 56,000, roughly in this vicinity. And as you can see, this is a major long-term uptrend channel that we seem to be trading Bitcoin within the confines of this uptrend channel. And when we take a look at the channel alone, you know, we are approaching, first of all, we've completed about a 61.8% Fibonacci retracement, which is the golden ratio completion of this move. And we are moving into an area that seems to be completing the target or meeting the upper end of this uptrend channel that we have here. So we're recommending to lighten up, take some profits, unload some of the profits that you have, synthesize some of your positions, and look to add on any corrections back down into this uptrend channel level of support that we have. So this has been a terrific market, and you can see the actual pattern seems to adhere itself almost at par, more or less, with the uptrend channel here that we seem to be unfolding here. Obviously, if we break out of this level here of this resistance and we're able to get through this, then we're looking at pretty much the $65,930, which is the upper extension of the Fibonacci retracement. So let's see what the market does up here. But in the meantime, we've locked in quite a bit of profits up here, and I recommend for those that have been following me here with regards to Bitcoin to do the same. But you are a self-directed individual. You choose what you feel is right for you. I'm simply showing you how I'm using the VCPMI and also conventional technical analysis to pretty much identify the artificial intelligence of this market that is telling us here on the weekly, we met the second level of resistance, the second target of 53,935. And when we accomplish particularly the targets on the daily as well as the weekly, it's time to take a breather. One thing I want to point out to you here is that the 54,000 level is a harmonic alignment that is converging the daily with the weekly signal. So if we get a close below 54,000, or 54,000, I would say, in that vicinity, we're going to be possibly activating a reversion or a short trigger from this level of resistance, which is showing that the markets are extremely overbought daily and weekly. And if we get the weekly reversion, the target would be that 46,015 once again, which is pretty close to this uptrend channel level of support. And right below that, we're looking at the weekly buy one level target of 43,325. So let's allow for the market to do what it's got to do up here, but our VCPMI AI is telling us that it's time to lock in some profits at these levels. One of the things I want to do here is to quickly review the latest report that we published in the Associated Press this morning through Seeking Alpha, entitled "The Biggest Ever Grande, the Biggest Ever China Crisis Looming." Summary. Evergrande is just a representative of the over-leveraging in the Chinese economy. The Chinese economy is driven by real estate speculation, which feeds the government tax base. Evergrande's collapse will have broad implications because it reflects the real estate speculative model that operates in China. Inflation is the biggest risk for your wealth. Statistically, the CPI shows another aspect of inflation. About 30% of the CPI is housing, but that is housing costs, not just real estate prices. Publicly, the U.S. government continues to print money and leverage assets more and more, with potentially little conception of the possible long-term damage that it could be causing. This idea was discussed in more depth with members of my private investment community, mean reversion trading. Evergrande 4 years ago, Grant published an article on China, Evergrande and its ever-rising price on the Hong Kong Stock Exchange. The thing I want to point out to you, this is a lengthy article here, but I want to just highlight some of the points in that Grant states that Evergrande board of directors in 2016 earned $46 million. And the article that he published warned basically of this potential crisis with Evergrande. The article warned that a crash was coming. Today, the company is one of the most indebted companies, with up to $300 billion in debt at risk of default. James Grant is a financial expert and author of 9 books. He published Grant's, which is required reading by many, many investors. On Wealth Track, Grant argued that Evergrande was massively over-leveraged and diversified. The company focused on building condo buildings, many of which remained empty. The company reflected the Chinese broader economy, which is massively leveraged. Chinese banking assets represent about 53% of the world GDP in the past few years. 22% of Chinese real estate is not occupied. Evergrande is just a representative of the over-leveraging in the Chinese economy. The Chinese economy is driven by real estate speculation, which feeds the government tax base. And Grant argues that Evergrande's collapse will have broader implications because it reflects the real estate speculative model that operates in China. Bond yields, 40-year cycle. Bond yields have been declining for 40 years, and the U.S. dollar has been decoupled from gold since 1971. The economy has been flooded with paper money. Borrowing is easy, and interest rates are extremely low, making it seem you can accumulate debt with no worries. The more debt we see, the better it has become for bond holders. In about 1981, the U.S. reached $1 trillion in sovereign debt, and now it is about $27 trillion in gross debt. Over the same time, interest rates have fallen from 15% to 1%. So it is extremely confusing why that has happened. Huge debt appears to be fine until the holders of that debt declines to roll over the debt and buy more debt, or until the borrowers can no longer pay the debt payments, such as if interest rates rise. The 10-year note has gone up about 20 basis points, which seems like nothing, but has rattled many people. Inflation appears to be more persistent than transitory. One of the things I want to point out to you here is also that we have a debt ceiling looming, a debt ceiling pending, which is going to increase the debt ceiling potentially to $30 trillion, which is running huge percentage to GDP. We're looking at 20-30% of GDP, which is just unsustainable, and the numbers keep changing. The Fed appears to be under the impression that it is in charge of events, Grant said. However, Grant said events are going to be more in charge of the Fed. On Wall Street, there is a generation gap between those who remember the 1970s inflation, which began in 1965 with a jump from 1% to 2% or 3%, and those who do not remember such times. We had none of the debt and crisis we have now, yet inflation began then and persisted for more than a decade. Younger people have seen nothing but falling rates and no inflation. So they have difficulty understanding that rates and inflation may rise. Let me just adjust here my screen to share this article with my trading room here. And going back to the article here, bond yields, 40-year cycle. Bond yields have been declining for 40 years, and the U.S. dollar has been, decoupled from gold since 1971. One of the things that we feel very strongly is the incredible explosion that we have on the Fed's balance sheet. The Fed's balance sheet exploding exponentially. The Fed is doubling its balance sheet every 18 months. The Treasury basically paying people not to work. Grant argues will lead to inflation and higher interest rates. The true measure of inflation is a moral issue. Grant argues that inflation is a form of theft and unlegislated taxation. There is also an intuitive factor, the feeling that there are too many dollars out there. Inflation soaks up unwanted dollars that can't find any demand for them. Statistically, the CPI shows another aspect of inflation. About 30% of the CPI is housing. But that is housing costs, not just real estate prices. Publicly, our government continues to print money and leverage assets more and more, with no conception of the possible long-term damage that it could be causing. This is a new time with such a philosophy driving the Fed and the Treasury Department. Inflation is the biggest risk for your wealth. Interest rates are key to determining that returns on every asset. Interest rates are suppressed by central bank policies. Therefore, everything you own hangs on the lowest interest rates in 4,000 years. If inflation persists and the Fed raises rates, which triggers a falling stock market, then what? No one knows, since the Fed has a low acceptance for falling stock market. At some point, the Fed will not be able to control inflation and interest rates. Events will take over. Inverted fundamentals. Grant says that gold is up to 50 times in 50 years. You should not compare it to stocks since it is a store of value, not an investment for returns. Grant owns a lot of gold, enough of it. All of the commodities gold appears to be the least responsive to the economic situation. It is very hard to understand. Cryptocurrencies may be taking some of the air out of the gold market. There is probably going to be better cryptocurrency invented compared to the one you own, so it is probable not one to hold for the very long term. Gold, however, is not going to be improved upon. Gold is underperforming. It is an investment, Grant says, in monetary disorder, of which we have a lot of. The markets continue not to be matching the fundamentals. We have a number of black swans, such as the China Evergrande risk of default on billions in loans. Now we have news that another development company, Fantasia, in China, has defaulted on its loans. We appear to be seeing the beginning of a possible domino effect in real estate developers in China. The key is whether the effect of these defaults will spread globally or remain confined to China in its highly leveraged real estate market and economy. At the same time, we are negotiating the debt ceiling for the U.S. government. The ceiling must be raised. There is no question about it. The pandemic continues and supply shortages continue to constrain the economy. Interest rates continue to be under close observation. The Fed may raise interest rates, which is causing jitters in the markets. Crude oil is shooting up, and some analysts are suggesting it may top $100 a barrel. Since the fundamentals seem so skewed, with gold and silver not rising rapidly with such negative fundamentals, we rely on technicals to trade. We have never had such debt, interest rate worries, a pandemic, this level of stimulus, inflation worries, and supply shortages, all of which suggest that gold and silver should be rocketing upward. Quantitative analysis. Our robo-advisor, Nikki the Robot, produced weekly Bitcoin, gold, and silver reports for this week based on our proprietary artificial intelligence algorithm, the Variable Changing Price Momentum Indicator, the VCPMI. Bitcoin. For Bitcoin, this week of October 1, 2021, the weekly trend momentum of 46,785 is bullish. The weekly VCPMI price momentum of 46,015 is bullish. And a close below 46,015 stop would negate this bullishness neutral. If you're long, take profits at the VCPMI sell one levels of 51,245 and the sell two level of 53,935 for this week. This is exactly pretty much where we are here today when we take a look We're at $54,570. So we've completed this daily sell one level and the weekly sell two level. Excuse me, they both sell two levels, and once again, they are harmonically aligned. So the targets have been completed. And when the targets are completed, basically the signal goes neutral, and it waits for the next fractal in price that will give us the next trigger point. We are making new highs in Bitcoin with a new target of 51,245. We have been long and recommended that our subscribers go long the market weeks ago. Let's take a look at silver. We are in a daily buy to level of 2240. Right below it, we have 2238, which is an average price. We are stabbing into an area of major support. Nikki the Robot said for the weekly silver report that the weekly trend momentum of 2331 was bearish, while the weekly price momentum of 2228 was bullish. So we had a little bit of a conflicting signal between the daily and the weekly. It told us a close below 2228 would negate this bullishness to neutral. And if you're long, take profits at 2315. And the sell to level of 2374. We have a buy trigger in silver from the daily buy to level of 2240. Let's check and see where we are with silver here. We're at 2240, so we're 2236 or in that vicinity, and we've come down once again and activate this 2224 area, 2228 weekly average price. And it seems that we are into that level of support between 2244 and 2224. Now, one of the things I want to point out to you, again, is when the price is in blue, it is an area of accumulation of supply. The algorithm is telling us that this is a high probability area that we could see reversions unfold that will revert back to the mean. And, you know, then again, after the move is completed, the market will revert back to test the previous levels of support. And that's where we are right now. But this is the highest probability area to go long. So close above 2244 will activate a daily buy trigger and supported by a weekly bullish price momentum. Once again, the VCPMI is the velocity of price within the bigger trend that is identified by the 9-day, week, or yearly or monthly moving average. It's the velocity of price within that trend, that bigger trend. Let's take a look at the gold market. Nikki the Robot weekly gold report said that the weekly trend momentum of 1783 is bearish. This is the 9-week moving average that we talk about. Then we take a look at the weekly price momentum, which is the variable changing price momentum, the mean, which is the velocity within this bigger trend. The weekly price momentum of 1749 is bullish. As you can see here, trading above 1749 is bullish. A close below 1749, stop. So the algorithm is telling us that this is a stop level for you to have. It gives you very clear entry point, the stop, where the price momentum will be negated to neutral if it closes below there. So you know exactly where you may want to stop out. The thing is, the weekly price momentum is integrating with the daily signals. So the intelligence gives us both sides of the trade. Basically, the extreme above, the mean, that tells us to take profits at 1777 to 1793. And also, if we come down below 1749, the targets below are 1733 to 1705, which is where you are looking at the highest probability to go long if the market activates these price levels. One of the things that I commented, and to quote the report, basically, I said that we seem to be looking for the annual bottom in gold to come in for this 360-day seasonal pattern, which began in September 28. Hopefully, from that bottom, we're looking for an acceleration to the upside like we have never seen before. Now that we established the seasonal bottom, we're looking at an annual bottom that essentially is being completed here as we move into the beginning or the early part of November. And we feel from this bottom here, we potentially could see a 20-25% rally into the end of the year, the first quarter of 2022. Be patient, my friends. It's been frustrating this past year to trade this market, needless to say, based on the fundamentals. But a big move up is coming. Continue to hold on to your long positions. Be patient, my friends. In the meantime, thank you again for this great opportunity to share this information with you. And in the meantime, my friends, have a great trading day. We'll talk to you next time.